Hello, good afternoon. This is Scott Wallace with eCapital. This afternoon, we're going to be walking you through financial services webinar using adaptive insight software to plan and manage and forecast your business. We're going to go through a number of things this afternoon, and we open to questions. Before I start, I have to talk a little bit about Safe Harbor since we're showing you the latest edition of software from Workday. This is just to let you know that everything you see is available and currently working within the software you're going to see. And so, if you look at any others, make sure you ask your partners where and what version they're looking at. You are looking at the latest and greatest version from Workday Adaptive. Today, we're going to cover a number of topics. First of all, we're going to go through real brief introductions so that you know who you're talking with today. We're going to talk about today's business environment in financial services. We're going to talk a little bit about what customers are saying, financial services customers are saying about Adaptive and how they're using it. We'll talk about Adaptive Insights in a little bit more depth so you know about the company, the product, what it can do, and what it can deliver. And then finally, the most important part of this is we're going to have a demo of the product, and you're going to be able to see it in action and how it works in a financial services environment. So again, thank you for joining us today, and we'll get off with introductions. As I said, my name is Scott Wallace. I'm a senior director here at eCapital. I've been in the business of helping clients address their planning, forecasting, and analytics needs for over 40 years. A majority of that time I spent at Deloitte Consulting, working with clients of all sizes and across industries. And so I've had experience not only in financial services, but in a number of different industries. And I'm looking forward to today's discussion and being able to share some of that with you.
Hi, everybody. I'm Courtney Belden. I've been with eCapital for the last 3 years, implementing planning and budgeting solutions for a lot of our clients here at eCapital. I'm really excited to show you guys today our financials model that we have prepared within Adaptive Insights and show you guys that model and all the demo we got prepared. Thank you.
Very good. Just a little bit about eCapital and who we are. We were founded in 2001, and we are focused and have been focused on the performance management space within our clients. We have over 300 clients, have over 80 employees, and we're headquartered out of Minneapolis, but very virtual, in that many of our consultants live elsewhere in the country. And in today's current environment, we are servicing those clients and kicking off projects in a very stay-at-home manner and very remote delivery. And so we're excited that we're able to do our work virtually and still deliver the same quality of services we always have been. To get started, I wanted to talk a little bit about our understanding of financial services. If I don't cover something that's important to you or something that you feel that we've totally missed, bear with us, ask a question, bring it up. All of that would be good. We look at it from both personal experience, company experience, and things going on in the industry in general through our research and elsewhere. But really, what we're talking about here is in an environment where customers are not able to meet debt obligations and how it impacts net interest income, impacts profitability of both banks and financial advisory firms, how the lower interest rates that were announced just prior to all of the shut-in-place type orders going around, and the fact that there could be additional interest reductions in order to stimulate the economy back to recovery. All of that is going to have an impact on your operating profits and how you look at your business. Thirdly, increasing the volume of loans, not only from small businesses and individuals, the whole program of offering the government stimulus and the pay protection program that's coming out, and all the loans that banks and different financial institutions are going to be lending in behest of the government. There's a real chance that we'll see a credit quality deterioration over the next few months as people are out of work or have been in reduced hours or have been furloughed, and so it could have an overwhelming impact on your models for expected credit losses and other risk models that you have within your organizations We're going to talk about a little bit how we're helping some other of our financial services clients integrate their complex risk models in a back and forth manner with Adaptive, so that they're able to pull data out of a financial forecast and put it into a risk model, run the calculations, and bring that data back into the financial forecast. So very powerful in that regard as well. There's going to be an increase, there is an increased stress on all of the financial and banking systems because everybody's remote. So everybody's hitting it digitally, both their accounts in their bank and their accounts, their investment accounts. All of those things are putting extra stress on the system. And there's concerns, and you guys are probably feeling it around cybersecurity and other things that could be impacting us in this current environment that we're in. But all in all, there's a lot going on. There's a lot of impact for of the current situation on financial services. And we're going to show you in that environment how you can better plan, you can better forecast, and you can better prepare not only for the deepening of the downturn, but the recovery that we're all going to be part of when this turns around. And so how do you plan and get ready for that? I wanted to talk a little bit and just show you a couple of examples of others in the industry who have used Adaptive and what they've been using it for. Northstar Financial is a large financial services holding company. They manage about $310 billion of assets. They were having significant data integrity issues. They couldn't get confidence in the numbers based on where they had to pull all the information from. Some of it went to spreadsheets and back out. And so there was an ongoing battle with that. They had a difficulty running real-time reports and consolidating their organization for that financial performance and those financial plans that they were looking for. So they turned to Adaptive, and we were able to stand up, or Adaptive was able to stand up an up-to-date source for all financial reporting and all analytics. They were able to get an organizational-wide view of their financial performance and especially very specific business drivers. And they were able to implement a 12-month rolling forecast, so they were no longer just bound by the current calendar year, but they could look with confidence out into the future. And that was a continuous rolling one, so they were able to minimize the effort that went into their next annual budget cycle. And so they were, they've made great strides with Adaptive and have been able to apply it in an organization of their size. The next example I wanted to share, the next and last example I wanted to share is with AGF. AGF's a Canadian investment firm. They have about $35 billion under management. They also were suffering from Excel, what we call in the industry Excel hell, but they were doing all their planning and reporting on spreadsheets. They had a very difficult time aggregating those and bringing them together because of changes, and people would modify sheets, et cetera. The same problems that many of us in finance or other parts of the operation have run into when we're trying to use Excel. And they couldn't see and understand, because they couldn't pull all the data together, a good comparison between their historical metrics and trends and their present day and their future performance. And so they were really struggling with that comparative that they needed to know how they were doing. After putting in Adaptive and working with the implementation team, they were able to really get good insights and very good visual insights. And you'll see a little bit of that today through the dashboards, and get into the real information they needed to understand. And in addition, they benefited from Adaptive's ability to cut out a lot of time from their monthly forecasting reporting. And they were also able to implement an 8-quarter rolling forecast. And so they were looking out at even a bit longer than the Northstar example. But these are both really good examples of clients that have taken Adaptive and really seen the benefit and quick ROI that you get from the tool. I'm going to get a little bit more into Adaptive itself. And anytime that you're dealing with very serious headwinds, that's the time that you really need to have a capability to do quick turnaround, run multiple versions, update the information quickly and see the results. Global competition, changing regulations, but even more important in today's environment, the global pandemic and all of the implications it has for your individual businesses and all of our collective businesses. So it's truly a unique and very strong headwind that is requiring companies to be able to forecast more often, to run different versions and different scenarios. You'll see some of that today, and have that capability at their fingertips. When you think of planning in that regards, you think of the headwinds and the ability to do the planning and do it easily, and being able to react to those things as they come up. Planning becomes a mission critical capability. And when I say planning, I'm pretty inclusive. It's your annual budget, it's your forecast, it's the immediate need today to change a variable and see the impact. And whether that's on interest rates, the loan volume, all of the things that you're dealing with in today's environment, be able to see that and update it and get the results very quickly. That's what makes planning such a strategic asset within the organization. And you need a tool to be able to do that, because in today's environment, what we see is a lot of people working on spreadsheets or on very disjointed and not connected systems. And it really is an environment of static planning. And I have seen this not only at my time at eCapital, but my time at Deloitte Consulting, where no matter the size of the company or the complexity of the industry, spreadsheets tended to be the main tool everybody was using. And I think what you're seeing is a rapid change in that with tools like Adaptive that can bring so much more to the organization. And in order to do that, in order to make it work very effectively, the solution has to be collaborative. But in order to be collaborative, in order to go across functions and get information, whether it's your loan operations group, it's the people in your branches, or it's your sales and marketing teams, they all have an input to what's going on in the world, and they can all make your forecast even more accurate. But in doing so, it's got to be easy to do, and users have to be able to pick it up very quickly. So what you're going to see is a user interface and a user capability that's like none other than that you've ever seen before, and you'll see that in our demonstration. The second part, if it's going to be comprehensive, and I'm going to be able to look at all segments and all business units and all functional areas of my business, then it's got to be powerful, because when I make an update, whether it's to interest rates, interest rate change, whether it's to the number of loans being processed, whether it's to my assets under management, the things that affect that, when I hit that button, it's got to happen fast. And it's got to be powerful enough to take all of that in, recalc, and bring it back up. You'll find that what you're going to see today is a system that can handle quite an unbelievable amount of information and still return a very quick result. And that brings us to the last point. It's got to be fast, because it's got to be continuous. I want to be able to do reforecasts not only on a monthly basis like many of us have done, or a quarterly basis, but now even more importantly, looking at cash flow on a weekly, even daily basis. I need to understand where I'm going to be. And so this is a tool that gives you that opportunity. So not only is it collaborative, comprehensive, and continuous, it's easy, powerful, and fast. I do want to talk a little bit about it in whole. Adaptive planning is a platform. It is not a standalone set of cubes. It's not moving data from one cube or one model to another model. It is in one model. It is able to integrate really quickly with a number of systems that are out there. And any system that is not one of the pre-built ones, it's not hard to hook up at all. This is truly one of the things in my career that I have seen is a real paradigm shift, is the ability of this tool not only to be so continuous and allow for collaboration and do it quickly, it's how fast it can integrate with any data source, which is really important. Anytime you're dealing with, for instance, very complex risk models, and being able to integrate and pass data, not only pull data, but push data back and forth. And we're in the process of doing that with our clients today. So very, very, very powerful part of the powerful part of the solution. I don't want to spend a lot of time on this, but I want you to understand that when we're talking about having the ability to build out as many scenarios as you want, as many reports and dashboards, as many dimensions, and you want to do it quickly and fast and powerfully, the reason they can do it is they've got this technology called Elastic Hypercube technology. What it allows us to do is bring in millions of rows of data, but only touch those data elements that are needed for any update or any recalc that you make in the system. So it's not having to go through and touch all the points and all the data. It merely goes to what it needs, which makes this thing stay very fast and very quick, even with large amounts of information in it. Adaptive has 4,500, well, I'd say almost over 5,000 customers now. We're waiting for an update to the slide, but continues to grow really rapidly. The number one selling solution in the marketplace. As you can see, they're in a number of industries. I've highlighted the financial services industries, since this was very focused on all of you. And they have been across the board in the type of financial service companies they've been working in. So, you know, very widely accepted and rapidly growing solution. And just to summarize from a adaptive standpoint, I've mentioned and covered almost all these points. The one that's really important to understand is that highest user ratings in the right-hand corner. Everybody talks about Gartner and Forrester and Constellation, all great things, and of course adaptive remains in the upper right quadrant. But when you really want to understand a comparability between adaptive and any other solution, you want to go out to G2 Crowd or Trust Radius and look them up, because those are users of the system that are rating the different solutions. And you can quickly pull up a comparison between adaptive and any one of the other solutions out there and see how users rank them. This is a very powerful rating and a very powerful support that it provides you and reference that it provides you on the adaptive solution. And finally, we're going to get into the demo. I thank you for your time today and listening about that. If you have any questions, you can ask them. We'd be free to, feel free to do that, and we'll make sure we get back to you. I'm going to turn it over to Courtney right now, who's going to walk you through the demo.
Awesome. Thanks, Scott. So a few of the things that we're going to be walking through today, I've got the model pulled up here. We're looking at a financial services model that we've built out within Adaptive. We're going to be going through a number of different things today. We're going to be going through dashboards, some detailed modeling, and we're going to wrap it up into an overall modeling looking at a P&L sheet. We're going to be doing a various number of what-if modelings in a different version to be able to see what different changes we make within this model to different assumptions and different sheets within the granularity level of the model to see how that impacts our overall financial statements in a report to wrap up the demo. Again, if you have any questions during the demo, feel free to shoot them in that little Q&A box down at the bottom right-hand corner. We'll be sure to get those answered for you guys. So to kick us off, we're looking at a dashboard here. You'll see a number of different things. We're looking at different KPIs that are just dynamically updated throughout the model. As users are making updates to their sections of the model that they are responsible for, these numbers are going to be dynamically changed and updated at the click of the refresh button. We have different options here. We've got gauges, waterfall charts, pie charts, different line charts looking at our revenue resources, our assets under management, and net margin, to name a few. We're able to input different sheets to give us a little bit more granularity view of our KPI detail across the month for our different metrics here down the side. I'd like to call out that we are able to look at this data at different levels of granularity as well. We're able to look at this at individual levels of our branches to get to a deeper level of granularity. Those level breakdowns are able to assign security to our users, so they'll only have the level that they are responsible for, and they won't be able to see data for the different levels that they are not responsible for. These dashboards are fully customizable. That means we're able to create them for your different business units or your different geographical locations or even for specific users. They're very, very user-friendly in how we're able to design and set them up. They're all drag and drop functionality and very, very intuitive for users to be able to do this on the fly. And if they have a different metric or a different idea in their head they want to see visually, it's very easy for them to be able to get that with a few clicks of the button. We're able to take snapshots of these dashboards and schedule them to be sent to our users via email, or take a new ad hoc snapshot whenever we feel we have the data at a place that we want to keep that snapshot as well. We're able to bring this into presentation mode. If it's month end and we want to present to either our peers or even execs, we're able to bring this into presentation mode and see each of these KPIs or widgets in a slide format to be able to bring to our team to review. These are fully interactable as well, so as data gets updated throughout the sheet, we are able to refresh and data will be updated on the fly for that as well.
It's a really powerful feature if you're in the middle of a management review or with other company executives and you wanted to make changes, you want to show them the results, you can pull it up in the screen pretty easily that way.
Absolutely. They are fully interactable as well. We're able to drill into some of this detail. For net margin, we can take it down and look at this at a level breakdown and take it down to any of the different dimensionalities that you have within your model. As I click here, you'll see all of the different dimensionality we have in this model. We kept it pretty simple for the sake of the demo, but whatever your needs are for your industry or your company, we're able to add any of that dimensionality for you to be able to slice and dice and see your data at different levels of detail.
So if you've got different products, different regions, different customer groups, you want to see that could all be built in and you could drill down through that.
Absolutely. We're going to move over to our interest income sheet. So this is a detailed sheet of how we're calculating and planning our interest income. Right now we're looking at it at the level of branch 1. So this means we're looking at it from a banking standpoint and we're looking at specifically at our corporate loans. A few things to call out is we've got a lot of calculations within this sheet. We're taking inputs from different assumption tables that we're going to get to shortly to see how this totally ties out for making a change somewhere else in the model and able to see that dynamically updated within this sheet. These blue triangles on all of these sheets mean that these are either a calculated account or a metric, being able to reference other time periods as well as other accounts within the model to be able to do different calculations and formulas to be able to drive all of these different interest income accounts. Jumping in, we're going to create a new what if version for our April scenario here. So we'll call this new version a what if April account. A few things I want to call out is we're able to make this version a copy of any existing version that we have. The list is short in this example, but you are able to have unlimited versions. What does this mean for you? It means that you can spin up any scenario for any scenario that you want to be able to plan or see what would happen if we increase headcount for the rest of the year. What would happen if interest rates continue to drop? We're able to spin up any what if scenario in an unlimited amount. We have clients that have over 200 versions and they have no harm to their system. It doesn't slow anything down. We're not seeing any hiccups or any issues for their system. Copying this version for this scenario, we're copying our budget version. Doing that, we're copying data at every single intersection that exists within our budget version. We'll be able to now leverage this new version. Once I hit save here, it's going to copy all data for all intersections. And now this new what if April version is going to be, we're going to be able to input and adjust data for all of our new sheets. I'm going to navigate back over to our interest income sheet. I'm going to refresh the page, and in our dropdown, we will now see our new what if version in our version selection.
You'll be able to see, I think what Courtney just showed, if you wanted to run versions even daily, you could save them. You could run reports. She'll show you in a bit how to compare them very easily.
So now you'll see our data has not changed, but we are at the what if version. Up here in the top right-hand corner of my screen, you'll see we're looking at our new version we just created of what if April. All data here is the same as the budget we were looking at before. So now we're going to start making some changes to the data. I've navigated to an assumption sheet. An assumption sheet means that we are able to store these at a global level and apply them to all of our different levels and dimensionality across the entire model. We're looking at interest rates and other assumption rates for our model here. We're going to make some changes. So interest rates are dropping. Let's change our treasury rates here for the rest of the year. We're going to be able to change these really dynamically by adjusting the data proportionally throughout. So we're going to decrease our interest rates maybe by 30% across the board. We're going to see a big change here. I hit OK, and all of those numbers that I had highlighted are dynamically going to change. This makes doing what if versions super simple for your users to be able to come in here and adjust data points very, very quickly with that touch of a button. You'll notice the points are blue, which means that a save has not been changed, or save has not been initiated for the change that we made to the sheet. I'm going to go ahead and hit save, and that is now going to push that change to all of the different formulas and calculations throughout the entire model that are referencing those treasury assumption rates. Upon saving, we have all of those new treasury rates saved for our April through December of the current year. We're also going to make a couple changes to our withdrawal rates. I'll walk you guys through how this is going to adjust some of our fees later in the model, but I'm assuming that more people are going to be withdrawing some of their savings as well as some of their financial advisory inputs. So we're going to increase this by 8% for April, May, and June. Again, the numbers are blue, indicating that we haven't saved the sheet. So we'll save, and again, that's pushing it all the way throughout the entirety of the model. I'm going to refresh our sheet now. In doing this, we'll see that our numbers have changed for our key rate for our April through December because we adjusted those treasury rates, and that is the rate I have linked to this sheet. We're able to adjust the ending balance, which is where it's referencing for our corporate loans for the specific sheet for our branch 1 interest income. We are giving out a lot of corporate loans in the economic climate that we have today. So let's increase for April to 60 million. I believe that's 60 million. That pushes out our interest income and our ending balance throughout the rest of the year for our assumptions that we have set in our global assumption sheet, as well as it's going to recalculate the entirety of this model for all of the other formula calculations we have once we hit save within this model.
Now, I know that you might have very specific things that you would want to put in your assumptions, specific types of loans, specific types of other products that you have, and you can add those very easily, connect them to the worksheets and the financial outcomes, and be able to see that change very quickly. So all of this is an example, and it can be customized to your specific company.
Absolutely. Jumping to a new model here, we're going to, again, go to our new version we created. We need to refresh the sheet, and we will see our new version in our drop-down menu and be able to make adjustments to our what-if scenario. You'll notice that this sheet looks a little bit different than the sheets we were looking at before. For this sheet, we're looking at our advisory fees income. That means our financial advisors within our portfolio management level are going to be calculated within this sheet. We are going to make a few adjustments to this sheet. Users are able to do this very, very easily. We're going to add some spark lines to be able to do some adjusting of data using our spark line trend here. Looking at our total sales, this is what we projected for the beginning of the year, but our economic climate is making a few adjustments to what we previously forecasted. We're able to use the spark line and make some changes to this data on the fly here. I can just drag and drop these data points to be able to make adjustments. I'm a visual user, and I think that for the next 3 months, we're going to see a sharp decline in what we were expecting our total sales for people investing their money with our financial advisors. So we're going to bring those data points down, and we're able to X out of this Sparkline sheet, and we'll notice that those numbers were dynamically changed within our numbers here. I'm also expecting that people aren't going to be investing as much money, so we'll just change our June data and copy it to the end of the year. So we'll notice that our June total is going to be spread all the way throughout the rest of the year, and we'll save this sheet. That data is getting pushed throughout the entirety of the model. And again, we'll see that that was changed, and our trend line here was also adjusted. For total sales for this year, we're expecting maybe a jump in for year total. Maybe we're not expecting it to be about 51 million. Maybe I'm expecting it to be 5,500,000. I'm able to break back this number by a couple different options here. We can do it proportionally based off of the percentages that we have for the current year. We can use last year's values or separate it based off of the different breakback options of 445 or 545 noted here. This is going to increase all of the numbers for the entirety of the year based on the proportions that we had previously set and have our total be that number that we want targeted for the rest of the year. Based on this sheet, this net advisory fee revenue looks about what I would expect based on our total sales here and the other assumptions we have throughout this sheet. What we're looking at here is a metric sheet, again, for our portfolio managers. We're looking at some metrics for what our financial advisors are delivering for this year. We're looking at their average account size, their new accounts, the number of accounts they closed, their average assets under management, and our total number of financial advisors for this specific level. We're again going to switch to look at our What If April version. Again, it's a direct copy of that budget version, so nothing is going to be changing here, but we're going to make some personnel assumptions for our What If April version and see those reflected here within this sheet. So that sheet is connected to a personnel sheet that I have open here. Again, we're going to switch that version to make sure we're making our changes within our new What If version that is dynamically populated throughout the entirety of the model. As this opens up, you'll notice this might look a little bit different than a lot of input sheets that you're used to seeing. We don't have accounts down the rows and periods across the top to be able to plan our people. We have many different columns using a lot of different metrics that are going to help people and our formulas be able to calculate exactly how much these people are going to be costing us. So we're going to add a new person, and we can add a new row, delete a row, or copy. We're just going to copy a row, and I'll walk through some of the different options we're able to adjust. So we'll put Scott Wallace in as our new financial analyst within our portfolio level. So Scott, he is going to be a portfolio manager. We're able to adjust health benefits. All of these drop-down menus have different assumptions that are tied to the values that are going to drive the healthcare benefits that we select for him and adjust the different values that are associated with all of these different selections here. We can have a start date. We're going to say he's starting in 2020, so he started at the beginning of this year. I'll just type it. Dynamically adjusting all that for him. We can adjust their hours per week to be able to adjust if you have people that maybe aren't working 40 hours a week. We're able to add into the calculation any type of scenario that you may be going through. If we're furloughing employees, if we are reducing hours per week, if we need to adjust any sort of pay rate, we're able to do it within the sheet and create different modeling and different calculations for whatever your needs are for your business. Upon save, this is going to be pushing that headcount number as well as different assumptions that are associated with each new person that we have within our model. As I jump back to our metric sheet, since that was saved here, we're going to refresh and we're going to see these numbers adjust based on that new person that we added to the sheet. Now you'll notice we had 5 financial advisors before. Across this year, since Scott started in January of this year, we now have 6 people across our financial advisors. So all of these other assumptions were also adjusted for that new person that we added into our sheet to show the new assets under management as well as the different account sizes as well. All of these changes that we have made and all of these detailed analysis that we did is able to be totally wrapped up into a P&L sheet, an operating expense sheet, overall workforce, whatever need you have for your business, we're able to wrap it up in a sheet for you to get full analysis within whatever your business needs are. Right now we're looking at a P&L sheet, and you'll notice a few familiar accounts over here through the demo that we did today. So we adjusted some advisory fees, some interest income, as well as some of our salaries and different commission things with the last personnel that we just added. We're able to tie all of those different modeling capabilities up into one line item or many line items, whatever your need is for your business. We're able to tie it up to be able to give you the full analysis that you need. Again, as these numbers are being changed throughout all of our different models and even within our P&L sheet, that is dynamically changing the dashboard and everything as well. If we want to see this at a deeper level of granularity for a specific account, such as advisory fees, we're very easily able to switch our view to view by level so that we're able to see how that's breaking out across our industry, across our company rather. So for our levels of portfolio management and investment management, for the account advisory fees, we're able to see the level of detail that is being brought in from our different levels or our different owners within our company and what their totals are for our advisory fees. Very easily, we're able to.
Yeah, the levels work any way that you need it to be set up. It could be by location, region, project, or product. So you can set those up and be able to drill through and see that view.
Mm-hmm. Another thing I want to point out within this sheet that I think separates Adaptive from a lot of other tools is that we're able to have actuals within the same sheet that we're looking at our budget data in. So if you notice, we have 2019 within this sheet, and those data points are green. We're able to bring in any size or any amount of time fields that we want within the system. So we're going to look at our actuals by quarter as well as year for 2019. Doing this is going to separate 2019 into our 4 quarters for us to get more deeper level of granularity. We're able to bring this down to month, week, or even day if that's something that is needed for your industry. And now you'll notice that we have green columns here for the first 4 columns. We're looking at quarter 1 through 4 as well as year total of all of our accounts for 2019 to be able to see our actuals as well as our planner budget data. We can reference our actuals to do formulas and increase it by 15% or whatever the need is. We're able to reference and use this data to be able to get a more accurate plan and forecast for our out months within the model. We're going to open up a report now to look at the differences that we had within all of the changes that we made today. So we are able to use a drop-down to look at our different versions here. We are going to bring in our What If April and rerun this report. And this is going to give us the variance as well as some conditional formatting to look at how these numbers are totally impacted. So based on the changes that we made, we are seeing that we have some impacts and some variances here. Again, this could be any of the different accounts or models that you have within your system that we want to see the impact of all of those different accounts and how it varies from our original version to the new version that we created today and did all of those what if scenario modelings on. Doing this opens the door for you to be able to see anything that could happen within your system and plan anything that could possibly happen with your unlimited amount of versions and unlimited capabilities to be able to spin up any version any day of the week in a matter of minutes to be able to see what would happen and what would impact your business at a deep level of granularity within these reports to be able to do this variance modeling. I don't believe that we've had any questions, so I'm going to go ahead and hand it back over to Scott for him to wrap up the webinar here.
Well, thank you very much, Courtney. Hopefully everybody was able to see the functionality that can be offered by Adaptive. The financial services demo itself should have been able to show you how we can make it work for your company, your accounts, your needs. Very customizable and easy to implement. I mean, we're looking and working with our clients in those 4 to 6 weeks, get that good value up and running for them, and then do it in a number of what I'll call sprints. And so your time to value is very low using Adaptive, and you can get this kind of functionality fairly easy. Again, the key things is unlimited versions, unlimited type dimensions and views, very powerful underlying technology. It allows it to stay powerful and fast so that you're able to see these kind of changes no matter how much data you've got in it, and it truly game-changing in that way. I want to thank you for attending today, and if there's anything else you'd like to see from Adaptive, from this demo or any other way we can help you, please feel free to reach out to eCapital Advisors, and we'll be glad to help you out. Thank you again for attending today. Appreciate it.